I think AI enables us to use data to come up with better products and solutions for our customers. Using that computer power, we can analyze much larger data sets using machine learning tools and internal and external data.
We will start with just a main question, general question. Since you took over as GCO of Ecobank in 2023, what are the most significant strategic changes you've made? And maybe a few words about your plan, growth, transformation and profitability.
Firstly, glad to be here and thank you for hosting me. Obviously, when you come in as a new group CEO, one of the things we did with the board was to review the strategy. So we were coming off the tail end of the last 5-year strategy. So one of the things we've done is we have developed and had approved by the board and the shareholders the next 5-year strategy, which is the growth, transformation and returns strategy. So that I think is exciting for us. We're clear about what we want to do, and I'll talk about that in a moment. I think the other thing that is part of that strategy is really pivoting into the growth areas. So we believe Africa has a lot of growth opportunities, and those build off our corporate investment banking, which was a core part of our business, which will continue to grow, and we've got opportunities to grow in cash management, trade finance, payments, along with the regular syndications and lending facilities that we give to our clients. We're investing in that part of the business because, number one, the level of financial inclusion is growing very rapidly. We see opportunities for new products and services for those clients across the continent. So we're building out products and services and solutions for them. And the same for SMEs. SMEs are the engine of growth of most of our African economies. And we want to provide propositions, solutions that help them become more effective and grow into corporates, in future. And then when we bring it all together, we have a whole ecosystem. We can bank a big corporate, we can bank their suppliers, their distributors who may be SMEs, we can bank the employees across the board. So this gives us opportunity to get into new areas of business that we weren't in before. And then the last area of business that is really important to us is our payments business. We want to be a leader in payments across the continent. Today, we're the only bank who can really do real-time payments across all the African countries in local currency digitally. So you can go on your app and you can take money from kwacha to shilling or shilling to cedis on your phone. And as a result of that, we want to expand that business. We want to be a leader in domestic payments within the markets. And that requires partnerships with all the different players, telcos, fintechs, banks. And then we're also going into the remittance space more aggressively by partnering with remittance players out there to bring diaspora inflows, foreign direct investment into the countries on the continent to help them invest. So you'll have recently seen we did a partnership with Neom and Transfer2, which brings over 200 countries, remittance and cross-border payment flows into the continent. And this is so important. So on the growth side, we're quite progressed. We're going to be investing in many of our markets. We see lots of opportunities both in Francophone Africa, Anglophone Africa, and we're going to deeply invest in those businesses to grow where we're already strong. And then we move to transformation, which is just how do we keep up with customer developments, social developments, and transform our business, technological development. So we're investing strongly, and I'm sure we'll talk about that. And then just giving solid, sustainable returns for our shareholders. That's the returns part of our strategy.
Okay. To stay in the global landscape, since you took over too, Africa's macroeconomics landscape has evolved too, and especially given ongoing and political challenge. What is Ecobank's role in all this, in kind of instability of so many African countries? How do you proceed in this environment?
Look, Ecobank has been in the continent and providing banking services for over 40 years. So we've seen lots of macroeconomic cycles. We've seen lots of political changes, social changes. So that's one of the strengths we have as a business. We're committed to the markets we're in, and some will have more challenging times and then they come back, and that cycle continues. So for us, what's the most important thing is that we provide the best possible banking services and solutions to our customers, whether they're consumers, customers, or whether they're SMEs, whether they're corporates, whether they're bigger projects like infrastructure projects. We are agnostic of politics. We're here for our customers. We're here to drive economic growth. And we have that experience, and that makes us different because we're connected to the markets, we're connected to the communities, and now is no real difference. We're ready to sail in different kind of waters. Whatever, if it's calm, great, we will sail. If it's a bit choppy, we will also sail.
Choppy waters indeed. We're going to ask you now to get your crystal ball out, because we'd love to get your thoughts on what 2025 may hold. Are we going to see the end of inflation, the beginning of a new credit cycle? What might the new occupant of the White House bring the world, and how does Ecobank navigate those choppy waters?
One of the things we do is we talk to all our different stakeholders to get a sense of what is anticipated, how people might react. So what we hear from those very close in the different markets is obviously we've got President Trump coming in, and we'll obviously, it's early days yet, we need to see what kind of policies will come out. I think people are obviously speculating based on his previous term in office. And I think what I would say when we look at the change in the White House, there a few areas that people are expectant and anticipating. I think we know his stance on tax, which I think has lifted the markets, in the US. I think immigration and just international diplomacy is going to be watched quite closely. And then there's, I guess what a lot of people are watching is now his stance on tariffs. I think he's been quite direct around wanting tariffs on those exporting into the US and supporting US firms. So we will need to wait and see. From an Africa perspective, I think there's direct and indirect possibilities. We know AGOA is coming up for review next year, so we will have to wait and see what his government stance is towards AGOA, whether it will be renewed. And I think in some ways it also depends on what's happening on the global stage, whether that's a priority for him. So it could be that there are other bigger priorities and it just gets renewed and there's no issue, or it could be in focus, we don't know. But we really hope that AGOA isn't affected because it really drives a lot of exports from African countries. Then when it comes to China, for China, we'll wait and see. I mean, there's quite some talk of much stronger tariffs on Chinese goods. That could have an indirect impact on imports of commodities. I think the exports of China to the US are a relatively smaller percentage of China's GDP, unlike markets like Mexico, where he's also talked about tariffs associated with immigration, if you see what I mean. So I think we just have to watch. There could be an impact on industrial metal and commodity prices. Those dropped a little bit upon when the election result came out. So we will have to watch. We can expect a stronger dollar, which we've already seen. And then maybe the interest rate cycle may take longer to come down. I think everyone was more poised for faster decline in the Federal Reserve rate. So they may take a bit longer to decline. And I think in terms of inflation, we just have to wait and see. I think there's two different levels of inflation. There's obviously local inflation within the African context, and then there's imported inflation, which could be affected by fuel prices, which is geopolitical. Commodity prices could, depending which direction they go, could impact inflation. But I think we might see interest rates being higher for a little bit longer than maybe we anticipated in the cycle.
Do you think that might lead to any possible opportunities for Ecobank or for other African corporate players?
Oh, absolutely. I mean, I think one thing that's great about Africa is we're very dynamic, we're very resilient, and so are businesses, and also so is Ecobank, where, so in terms of opportunities, I think there are a few opportunities I would talk about. I think Africa continental free trade now comes into focus. because if there's disruptions in trade corridors, it really stands out that we should trade more amongst ourselves for our goods and services. So I think Ecobank is really focusing on how do we amplify, support and encourage trade across Africa to move from around 14% upwards to north of 20-25%. And I think that will be good because it diversifies out our customer base and business base. And we can also look at trading in local currencies among those countries, which also eases the pressure on dollar inflows and dollar commitments. The other opportunity that I think is there is around value addition. Depending where the tariffs go, there could be opportunities to onshore value addition, industries. So it could be, instead of putting a battery plant somewhere else in the world, they may decide to set up the battery plant within Africa, right? So I think that's also an exciting opportunity because people move very quickly. We saw this after COVID, where a lot of businesses were set up in China, and then where those trade corridors got disrupted, they're now setting up businesses in North Africa closer to their clients and diversifying out their risk. So I see a lot of opportunities for investors who are ready to go closer to the source of those commodities, to value add, to drive manufacturing. So I think that will be another advantage. And then we shouldn't forget that I think Africa needs to focus on investment in exporting services. We always tend to think about, physical materials, commodities, whether it's agricultural or mineral or oil or gold. We have a dearth of talent. We have exceptional young people who are very skilled. If you look in the technological area, we have excellent coders. These people can be working from Africa, providing services to American firms, to European firms, just the way we see India having done it and some other parts of the world. So I think if we pivot ourselves, we adjust, that will be positive. And we are very close as Ecobank in terms of supporting trade, supporting value addition, supporting agriculture, because they need our agricultural produce. We have an agricultural strategy. We're supporting tech companies to expand across Africa through our single IT API platform. And I think all of this will come to support the growing middle class of Africans. We should never forget we have our own market with their own needs. And we want to support businesses in Africa that provide services, health, education, agriculture, like I've said, manufacturing, food production. Those, we have big enough markets here that we can also grow, that will give opportunities.
You were talking about opportunities for investors, and given the footprint of Ecobank, a large footprint in the continent, you are more than relevant to talk about this. And maybe you are more than relevant to speak about what is going on with AFCTA. It's slow to be implemented and to be a reality in the continent. Do you have some advice or?
I think there can be some misconceptions about Africa continental free trade. When you actually look at the speed upon which that it was actually implemented and signed, compared to when you look at the developments in some other areas of the world, it's actually one of the fastest to be signed. So in terms of the agreements between countries, those we know have been signed. I think where it's been more challenging is in terms of the operationalizing it and actually seeing it flowing through into the numbers. And 2 or 3 things stand out. We forget how large the African continent is, right, in terms of sheer geographic size. And then when you add on that we have massive infrastructure financing gaps. So if you're trying to move product from West Africa to East Africa, even flying from West Africa to East Africa, it can be 8 hours. Yeah, do you know what I mean? And
it's expensive.
And it's expensive. So I think the challenge of infrastructure, the challenge of movement of people still needs to be addressed. So I've been in various forums, including with the Secretary General of Africa Continental Free Trade, to talk about we need to make it easier for people to move, and especially business people. So obviously we have to balance around security concerns, etc. But I think if we make that easier, I think it will help people move around, see the opportunities. I think the second thing is what we expect and where Ecobank will try and support, given that we're in 35 countries. We want to differentiate that expertise in 35 countries to drive trade. We've built out a digital trade hub where buyers and sellers can come onto the platform. get to know each other, and then we can support from a trade finance and payments perspective. So we're encouraging more what I call sub-regional trade. So within ECOWAS, bordering countries can trade with each other, right? Within East Africa community, we try to support those within the trade corridors. Whether it's SADC, that we can encourage those. And then we're also now picking up on trade corridors between markets like India and Africa, China and Africa. So our offices in places like China support. Our offices in Dubai support trade with Middle East, whether it's tea and other commodities. Our office in London supports businesses there. And then our bank here in France is also supporting businesses that are doing business with our Francophone countries. So we are optimistic that we can do more, but to your point, we need to add more pressure, and we are talking to government to try and remove the barriers, the non-tariff barriers that are sometimes getting in the way of businesses doing more trade.
Yeah, so this is political, maybe barriers. Talking about a competition, a little bit. Ecobank a decade ago seemed to be alone in the Pan-African space, but now it's a little bit crowded with Nigerian, South African, Moroccan competitors. But you still have 35. It's a lot, but 35 offices in world, because it's not only in Africa. Is Ecobank scared of expansion?
One thing we're very proud about is our footprint. So we operate in 39 countries across the world, and we have 35 markets across Africa, and that is unparalleled. And we're proud of the work that was done by those before us to get into all of those markets, and it's unique because there's quite a margin of distance between us and the next largest footprint. Africa finance, when we look at it, and banking still has huge opportunities across in terms of banking, financial inclusion, financial integration. And one thing that makes Ecobank very unique is the fact that we operate across, Francophone, Anglophone. We have Spanish countries operating in Spanish, in Portuguese. That is very unique, about us compared to some of our competitors. The other thing is we operate a diversified model. Most of the other banks have a very strong core market, whether they're the South African banks, that tends to be the vast majority of their business, or if they're East African banks, that's 50, 60, 70% of their business. Then you go to the Nigerian banks, that's their core market is there. We are in 4 regions. We don't have like a core market. We actually operate in each of these countries and are systemically important in 22. We're top 3 in 15 markets, so we're very strong in each of those, and we support businesses in each of those, and we've been there for a long time. So we're confident, we don't rest on our laurels, we are not complacent. I think competition is excellent. We welcome competition because competition is great for customers. It's great for products and services. And what we bring as Ecobank is we pick products and ideas and see solutions that have worked in one part of the world and introduce and share them in other parts of the world because they may be relevant, they may accelerate the development of the finance industry. And with our strategy on technology, our unique platform, our skills, we're confident we can still grow. And we'll also collaborate with other banks. The opportunity is developing Africa.
So this is the way you are growing without acquisition, but growing in technology and partnerships.
We don't rule anything out. If acquisition opportunities come that make sense for us, we will definitely look at them, and we would communicate if that was the case. So nothing is ruled out, but we see that we can grow organically by investing in our businesses, and if the right opportunities come inorganically to strengthen our position in some markets, then we would definitely leverage on that.
The acquisition game is difficult. Attijari Wafa Bank bought Barclays in Egypt. They've been struggling to digest that, I think. You purchased a bank in Nigeria over a decade ago, and it seems that has been a difficult digestion process. Is that integration finished? And what will it take for Ecobank to sort of catch up with some of the stellar earnings that we see from Nigeria's bigger banks?
You quite rightly mentioned, acquisitions are never easy. I've seen acquisitions throughout my career in all different parts of the world, and sometimes it's underestimated. People think they acquire and it's going to be quick to throw off money, but you've obviously got issues of structural issues to do with the balance sheet, also issues to do with culture, technology, and it sometimes takes a while to fully integrate and get the benefit. In our case, yes, the acquisition was made over a decade ago. And then there were certain macro changes that happened even within the industry over that time that were not necessarily unique to Ecobank, but were also happening within the industry itself. And then there was also changes in the oil and gas sector. So the bank that we acquired was quite strong in oil and gas, and there were structural changes within the oil and gas industry. And that made that acquisition harder from that perspective. I think the other thing which did affect us and what made it longer for it to come through was just the structural nature of that balance sheet, because that balance sheet was quite, it was US dollar oriented, and we've seen now when the effect of depreciation tends to put more pressure, on institutions that have borrowed in dollars rather than in naira. But having said which, that was a long time ago. We're excited about the opportunities that are there for our Nigeria business. Nigeria is a core market for Africa. I mean, you think about the size of its GDP, more than 200 million people. Today, 20 billion of remittances comes into Nigeria every year. You've got 60 billion of domestic remittances. It's well poised to be a trading partner. You've seen the likes of the Dangote refinery. They've just said that they've just exported their first batch of refined product. So I think the dynamics of the country might change. You've seen the policy changes that are coming through. And for us, the most important thing is to invest in solutions for our customers. We see a big opportunity in our strategy to grow our consumer business, our SME business, and to get into what I call the core sectors of the economy: education, health, agriculture, production, green energy. I think are all opportunities that we feel we can be able to lend our expertise. So we'll continue to drive efficiency. We'll continue to drive, innovation. We'll use technology to provide solutions, and where we'll continue to see, I'm sure, that progressing.
Are you ever worried about, because you mentioned your very strong geographical diversification, and you're obviously diversifying in terms of the businesses you're getting into beyond trade finance and, as you were saying, into these various consumer-facing areas. But it looks like 25% of the revenue remains Nigeria. Is that too concentrated? Would you want to diversify that?
So today, Nigeria actually represents 6% of our revenues. Because of the depreciation effect and the fact that we report in dollars, you've seen it move, the naira move from 460 to in the region of 1600, which it is today. So Nigeria is 6% of our revenues, but to me, that 6% represents the opportunity. Do you see what I mean? In the sense that there's upside for it. But what it also shows us is the strength of our diversified business model. We had two fairly challenging scenarios since I came on board. One, we saw the depreciation of the naira, which we're all aware of. And the second, we obviously saw the Ghana negotiations, the domestic debt negotiations, the Eurobond negotiations. And given we are a strong bank in Ghana, that also affected us and our ability to generate revenues. The strength of our model was that the other countries grew even faster. And you notice we still grew our revenues year on year, even with those effects. So we are quite encouraged that our model gives us some shock absorption capacity. One country is down, another one comes up. And now, especially with our growth engines in new areas, we've got a very strong leadership that we've brought in on the consumer and the commercial side. I brought in a previous global head of a couple of international banks to lead that. We're bringing in subject matter experts. I brought in a subject matter expert and leader who has built payments business across Africa and has connections into their area. I brought in a new head of corporate and investment banking who has very strong experience across Africa and was a CEO in Nigeria of one of the banks. So we really see our skills and our experience will enable us to perform going forward.
You mentioned many times during our interview technologies as leverage for growth. What do you think, what do you expect the impact of AI could be in your industry? What is your vision on AI for banking sector?
AI is going to definitely change all of our lives, not just in the financial industry. And we treat it very seriously, and we look at it in a number of different ways. One is it will simplify tasks, right? So we'll see tasks being automated. So for example, at its simplest level, meetings, they can decode the human voice, summarize meetings for you. So it takes away that manual work. But then I think AI enables us to use data to come up with better products and solutions for our customers. Using that computer power, we can analyze much larger data sets using machine learning tools and internal and external data. We're going to be refining our products, coming up with new products, re-engineering our processes that we believe will allow us to take faster decisions, we believe will enable us to simplify our operations and focus on what customers want, a great customer experience. So when you blend that with the technology solutions, whether that's our mobile app, the interface that you use, is it simple, is it easy to use? Does it have all the functionality? Our agency banking, our card products. We've got a virtual card product that you can use from your app to make payments. Our partnership products. Our API is really quite extraordinary. You can connect to our API as a fintech company or a tech company, and you get access to 35 countries. This is second to none. So if you want to expand quickly, we become the partner of choice, and we're building out what we call our banking as a service business to support tech companies or companies that wish to expand across the continent using that API platform. So AI is central to our strategy. It is embedded within. It's like sustainability. You don't talk sustainability on one side and business on the next. Sustainability is embedded. AI and analytics are embedded, and we're investing in that capacity to deliver better solutions for our customers.
I have a follow-up on that, and then maybe, if I'm allowed, another question. But it's really to understand, your vision of AI in the survival of banks in the midterm. Because if I speak to bank leaderships across the continent, the themes which come back are the way big tech is sort of encroaching on some of the payments space, and how fintech is obviously also a big part of the picture. So you've got the edge in terms of KYC and doing that sort of heavy lifting around identity. How does all this fit together in the AI world that you draw out?
So I think the challenge with AI is it's evolving at such a pace that it's hard for leaders to keep up, right? And I think that's the challenge for all of us. So many developments in computing, so many companies doing different things. So keeping up is just a leadership challenge, and we all have to rise to that. But in terms of the use of AI, I think there's going to be so many use cases. You touched on KYC, AML, the ability to analyze data sets and correlate data points to reduce risk. Let's say it's called terrorist financing. You can do things in fractions of a second that would take months to do manually. So that gives us greater assurance that we're able to manage suspicious transactions, manage financial crime in a more sophisticated manner. It becomes hard. And when you cross-correlate things like Internet of Things, you start cross-correlating data sets in banking with footage that you've got of CCTV cameras, the security forces should be able to deal with that better. Now, when it comes to day-to-day banking, analytics around credit scoring, artificial intelligence solutions on that front, again, are drastically going to improve the services that we offer. They will improve the way we manage risk, and see trends much faster to enable us either to stop in some areas or to go into some areas if things are working. So it's going to be incredibly important that we do that. And I think for us to do that, what is exciting for us in Ecobank, we believe in doing this through partnerships. In the past, banks used to build everything themselves. But now these firms are much more advanced in their area. So credit scoring, for example, we can partner. There's AI companies who provide certain solutions. Our partnership with Transfer2, they have great compliance solutions that we're looking at integrating into this. When we're looking at nano loans, they have great solutions also that they will bring. So for us, it's an exciting opportunity, and we see this great for customers, which is more important than anything else.
AI speaks to the future, but Ecobank can also contribute very much today. And one of the big challenges is industrialization and lending to the real economy. How do you see that from Ecobank?
That's Ecobank's core. We want, as I've already mentioned, we want to invest in supporting businesses that drive the real economy. That's when I said manufacturing is one, health, education, agriculture. Those are the real economy in Africa. Supporting SMEs to do their business is the real economy. And we have so many examples. We have specific programs like our Elevate program, which supports women to run their business. So it's financial and non-financial. We're trying to build capabilities to make them more successful. We've got subsidized or better pricing facilities to encourage them to grow their business on the SME side. We also support big corporates, in their investments. We've got a huge partnership with IFC, building a cement factory in Senegal. We've got green energy that we support. We're supporting an e-mobility drive in Ghana for electric charging points for electric vehicles. So we're bringing in the green energy side. We're supporting infrastructure projects that will now enable industrialization, not just in cities, because power is restricted to those cities. So if you get power outside of those cities, now you start getting factories creating jobs in different locations. You need a road network or a rail network to take those products to market. So investing in the real economy is core for us in Ecobank, and we want to support the entire ecosystem. Corporates doing their big business, suppliers, distributors, employees, large companies, and smaller ones, and that's what's going to drive the economies of the African continent.
Thank you very much.
Thank
you so much.
Thank you.